Hey everyone, welcome to the KE Report, another daily editorial. This time chatting with Dave Erfle, founder and editor of the Junior Miner Junky. We'll touch on the gold price as well as underlying precious metals stocks and also touch on the discovery news. Junior turning into another producer, as well as some follow-up news also in Mexico on permits being issued. A bit of a change in tenure out of Mexico. Dave, let's start off with gold. Gold right around that 2850 level has dropped a little bit as we just started recording this, potentially on the back of the news that tariffs might be pushed off a little bit. But either way, gold has remained strong. It's something we've been talking about for years now, actually. But even over the last few months, when the sector was moving lower, gold was still holding up very well. And even the stocks are outperforming to the upside. GDX up right now over about 16% just this month. So, Dave, your takeaway from precious metals, gold. Again, the story remains the same, continuing to do well. And even what I'm seeing, some gold stocks, even some of the juniors moving higher without any news.
Yeah, I mean, it's been a great week for the sector. Leading into the sector, we had both silver and the miners were leading gold into the breakout, hinting that, hey, gold's about to break out. I mean, we got geopolitical risks, tariff threats, untenable sovereign debt, conflicting central bank monetary policies. And then later today, we had a PCE number come out that was still, well above the Fed's 2% target. I think it's around 2.8%, and that's the Fed's preferred measure of inflation. While yesterday we had a preliminary Q4 GDP growth reading of 2.3%. So you can add stagflationary fears to the bullish gold cocktail.
Well, it's quite a cocktail indeed of factors. But Dave, like as Corey mentioned, some of the stocks actually getting a little life on this. I mean, I don't want to say it's a rising tide lifting all boats, but some of these boats were on dry land. They didn't even have any water underneath them. And now they're starting to go up. Are you encouraged by the action you've seen in the stocks lately?
Absolutely. Yeah. I mean, look, today's the last day of the month. So we have a daily, weekly, and monthly all-time high in the gold price, joining all other major currencies already having broken out. And both the miners and silver, which I had mentioned had been lagging the gold price over the past 3 months, had already broken out of the technically bullish falling wedge pattern ahead of Thursday's gold breakout. So with gold making 40 new all-time highs in 2024, it also stands to reason that 2025 could be the year that silver finally makes its run, following a 4.5 year consolidation, mostly below $30 an ounce. And that's created a strong base. And as we talked about on the show before, both silver and the miners and the miner ETFs, those charts look awfully similar. Now, the key ingredient missing from this phase of the gold bull market has been Western retail investment demand, especially from the US. I mean, as you know, investors have been distracted by AI and crypto. But beginning the week, Nvidia experienced a $500 billion plus equity wipeout, and that accounted for over half of the $1 trillion stock market loss on Monday. So, Nvidia's market cap is still over 3 trillion, but the single day loss in Nvidia of over 500 billion is also $100 billion more than the total market cap of the entire precious metal sector. So this China deep seek issue has basically rewritten assumptions around the price to perfection and overcrowded AI trade, and that's provided opportunities for diversification. Gold stocks have already quietly been a standout performer this year, especially against the S&P 500. But the lackluster volume has been basically showing us that retail has yet to come in to this to the complex in size.
Oh, let's be truthful too. That deep seek news, it hit the chip makers and it hit energy stocks. We saw big tech, who's also in AI, their stocks, some of them actually went up on that news too. So, yeah, we didn't see that money necessarily rotate totally out of the AI trade, just into different sectors of it. Let's get into some more of the news from this recent week, even the last couple of weeks for the sector. that Discovery Silver news, buying the Porcupine Gold Complex from Newmont. The stock moved much higher on that news. Again, it's a junior moving into being a producer. And look, it's a $425 million US deal. That's a big deal for a company like Discovery Silver to just even be able to put together and finance. Your takeaway from that deal?
Yeah, it's a fantastic deal. As you're well aware that, my subscribers and I have been holding a risk-free position in Discovery for the past few years after we sold a third after a triple in 2021. So, and the stock has basically been in the Mexico permit doghouse ever since then. And basically, this is a very positive deal for Discovery. I mean, they got a producing asset that is expected to produce 285,000 ounces per year for $26 an ounce. And basically, they did it with not much dilution because Franco-Nevada has purchased a royalty, and a lot of and 150 million of the cash is deferred to Newmont. They don't have to pay it for another year. And basically, Franco-Nevada is now a 9.9% shareholder when the deal closes, expect to close later this year. And Newmont is going to be a 15% shareholder with their stock tied up for a year also. And basically now Discovery, the share price is out of the Mexico permit doghouse. And now it's going to provide exposure to both gold and silver prices. And they also got more news this week when Alamos received what I think it's the first environmental permit granted in New Mexico's in about 18 months for the Puerto del Air project. It's already a producing mine, but for an extension, they got it for extension, and it's an underground mine. But still, that's huge news. And a lot of the other small juniors that are operating in Mexico that are de-risking projects and waiting for permits, they all popped on the news.
Yeah, Dave, that's encouraging news for Mexican miners across the board. And we have also seen Grupo de Mexico get 3 permits, and also Avino get their permit to go into La Preciosa, on top of that Alamos news that broke this week at Mulatto. So big news for permitting in Mexico. Just want to ask you about the move into gold production, though. Again, another silver company. This is Discovery Silver, and I should disclose I'm a shareholder as well, but they're going into gold, not into silver. And this is the mode we've seen a lot of companies do. We've seen the bigger companies do this. We've seen the mid-tiers do this. We've seen the small companies do this. Is it concerning at all that a lot of the silver companies are now just as exposed to gold?
No, not really. They're just following what royalty companies and major silver companies have done also. Remember, wheat and precious metals used to be wheat and silver. And all these companies and Pan American Silver, they've got a huge exposure to gold now. I mean, it's just a smart thing to do because the silver market is so unpredictable and so volatile. And let's face it, the gold market the gold price is in a major bull market, while the silver price is yet to catch up to gold. Like I said, it's been consolidating in a 4.5 year base below $30 an ounce for the past 4.5 years, and the stocks have been doing the same. So I think it's a wise move, especially for a single asset developer, that's been in the doghouse for so long, like I said, due to Mexican government permitting issues.
So, how do you view silver only stocks then? Would you invest in silver only stocks that don't have that gold component?
Oh, I do. I am invested in a couple of them. And yes, the companies that I'm in, the projects are world class, and the management teams are very serially successful. They've been able to raise capital at the right times. They have access to capital. They're fully funded well into 2026. So I'm not concerned at all with the silver only companies that I own.
Well, Dave, the reason I asked you about the move into gold wasn't that it's smart for the company to smooth over the volatility from silver and bring in some gold that's at all-time highs. It's just that a lot of investors invest in silver companies for the leverage they think silver will bring when it finally does outperform gold. And if it's watered down with the gold, that's the concern some investors have. So just in that standpoint, that you may get less leverage on a silver bump if you're 50% exposed to gold.
Oh, yeah, but I'm not really concerned about that. Look at a company like Skeena. They recently did a stream on their project, and they made sure not to stream the silver. They're only streaming some of the gold, so they understand the leverage that their silver provides. I mean, once that SK Creek mine is going to be in production, it's going to be one of the largest silver producers in the world, I believe.
So, Dave, the landscape then clearly much better for a wide range of precious metals companies, especially the gold companies. But again, we're even seeing silver companies move, but there's still a couple of those silver miners that really aren't doing much. Do you adjust your portfolio at all as we move through this market where, yes, the money is at least now starting to filter down into some of these smaller stocks that really haven't had much momentum to the upside?
Not yet. I mean, I'm still pretty much in the small cap growth oriented producers, later stage developer explorers. I got a couple of companies that are earlier stage explorers, but I really don't want to get into anything super early stage that has yet to define a resource. I don't think the time is right for that, and the market will tell us when. I mean, you'll start to see some of these companies that have produced these great drill results that really haven't gotten much love because basically they haven't been able to raise enough money. I mean, money is still super tight to raise for a lot of these smaller juniors. When they're only able to raise 3, 4, $5 million, you can't get much of a drill program. And then even if you're lucky enough to hit something, the street takes a look at your treasury and says, oh, look, that's a great drill hole, but they're going to have to raise money in 6 to 8 months. So let's sell the stock and then we'll be able to get a better deal on a private placement and possibly a warrant. And then further down the road, we can even sell the stock 4 months later and strip the warrant. That's still happening because retail is yet to really come into this sector in size and bail any of the speculators out on ill-timed entries on a lot of these juniors.
Well, Dave, to that point about some of the juniors that have resources in the ground and they haven't been re-rated higher yet, when we see gold pressing above $2,800 now into the mid 28s, with some people looking with their eye at 3,000 as another big round number, it makes me think again about what we've talked about in the past, sensitivity tables to the metals prices and how divorced they are from where a lot of the studies were done. I completely understand that you got to show in a pullback on a defensive market at $1,800 gold or $1,600 gold that the project still works. But there are still companies using a base case of $1,400 or $1,600 or $1,800. We're $1,000 above that now. Aren't some of these assumptions just not keeping up with the trends in the metal and as far as their economics?
Yeah, I mean, what a lot of companies are doing now, though, in their studies, is they're showing what the numbers are at higher gold prices. They'll use, a more conservative base case, but then they'll show what the numbers are at higher gold prices. I like that. I think that's a smart thing to do. Then they're showing, hey, our base case is 15, 16, $1,700, but look at what our numbers are at spot or at 2,500 gold or whatever. I mean, that's a wise thing to do. And I think the companies that are doing this are getting a little more love from the market if they have that access to capital to build out that project.
So do you move into optionality plays then? Because look, every project's going to look better at higher metals prices. The optionality plays, you could argue, are going to have even better look to them because, well, they can make more money at higher prices and they could look better than, well, where they look at lower prices. So optionality plays, any interest in those?
Yes, I'm already in several. So absolutely, you never know when this sector is going to ignite. In January of 2016, it ignited and it happened really quickly. All of a sudden, a lot of these juniors went up 3, 4, 5, and some have even 10 times in the space of 6 months. So you want to be positioned in some of these optionality plays that are maybe trading at all-time lows. But if they're starting to build a base and they're starting to move higher based on what's happened recently here, especially this week, and I've seen it in a few of them, those are companies you might want to get on the phone, talk to the management teams, and find out what's going on with them if they got some catalysts coming up to take their share price to join the party.
Well, Dave, in light of this, we're not the only ones looking at these price moves and how the optionality can affect projects. Do you think we'll see more of a spur of M&A than we even did last year in light of other companies evaluating projects that are becoming more and more valuable?
I think so. I think the M&A continues. And these companies, they're lean and mean now. They've done a great job shoring up their balance sheets. They're paying dividends, they're doing share buybacks. They still have a lot of cash, and they're going to have to start concentrating on growth now that gold is broken out again. The shareholders are going to be clamoring for more growth. So absolutely, if you add in a major discovery or two, then maybe it's going to start bringing them some retail into this sector.
Growth, that's one thing that I think we want to come back into this sector because that is what investors are looking for. It's great that the metals prices are higher, but let's get these companies growing, and the best way for them to do it, at least the quickest way, is through M&A. Look, right now it is almost the perfect scenario for precious metals, and finally the stocks are joining in early on this year. We'll see where it all takes us here and what sort of other news. It seems a lot of geopolitical news, especially around tariffs, continue to push around these metals prices. But hey, right now, if you're invested in these stocks, I assume you're making money because a lot of these stocks are moving higher. Dave, thank you as always for your time. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Have a great weekend, Dave.
Thanks, guys. You too.